everyone, welcome to our YouTube channel. मैं हूँ चारू आपके साथ and we are back with the next episode of हम दो हमारे दो season. So do watch all my videos and keep giving me tips and feedback about the videos which I have shared. Today we have done more gold digging and inside the Dalal Street and found out two reasonably priced stock in out next part of this season. We have found out some information about PSU banks which can be a buy for the risk traders of the Dalal Street. So the first stock which we recommend is Central Bank of India. It is a buy at CMP rupees 13, target price rupees 25 in medium term and rupees 50 plus in long term. It can also be used as a trading opportunity to take advantage of this consolidation pattern and buying at rupees 12.5 and selling at 14.5. It is a prolonged consolidation in a rectangular pattern which holds as the bank looks for government support. If someone is smart, he can take risk of buying 10,000 shares around rupees 13 and can sell it for 14 within a couple of days, leading to a cool profit of rupees 10,000 in a couple of days. Such badly performing banks have spoiled their goodwill and trust of the common man. Net NPA ratio about 10% and gross NPA 34% indicates mismanagement and a lack of diligence among the top management, which led to decline in asset quality and eventually hurt the stability of the bank. The bank needs urgent recapitalization to do sustainable business and bring its mojo back, riding on its own pan-India presence with a large number of branches all across the country. Now, earlier prior to COVID-19, this bank's performance wasn't so great as NII fell to rupees 1,331.24 crore in Q1 financial year 2018 compared to rupees 1,715.48 crore in Q4 financial year 2017. It displayed an erratic but decreasing trend from Q1 financial year 2017 to country GNPA rose to 31,398.47 crore this quarter, a rise of 15.22% compared to Q4 financial year 2017. Compared to Q1 financial year 2017, the GNPA grew by rupees 6,291.0 crore, which is 25.06% in Q1 financial year 2018. The NNPA increased by 3,175.7 crore, which is 22.31% as compared to Q1 financial year 2017. It grew to rupees 17,407.43 crore this quarter from rupees 14,217.83 crore in previous corresponding term. The badly performing PSU bank with over 90% promoter holding is valued very cheaply and has bottomed out, and it can't go beyond the amount it is traded at. This has led to decline in stock prices from around rupees 200 levels to just rupees 13 as people feel that there is no value for equity investors left in this bank, which is cash trapped, and it's required government support for recapitalization. So there was a rampant corruption allegation on PSUs and a lot of willful defaulters have emerged, which led to lack of trust in PSU banks. Now people prefer opening savings account with private banks or some stable public bank like SBI, as these small mismanaged banks aren't perceived to be safe. Now, the next stock which we recommend in the PSU bank space is Punjab National Bank. So, same story of Punjab National Bank as in of a Central Bank of India. The stock prices are languishing at multi-year lows and are valued at just around 20% of its lifetime highs. The reason is Nirav Modi's scandal, which led to the fall of Gitanjali Gems. There were bad loans of billions of dollars unearthed from the PNB bank scam. Therefore, its prices cash crashes down. It's a buy at CMP rupees 33. Target price is around rupees 50 in short term if recapitalization is done and better loan disbursement and credit profiling is regulated by the government to prevent money being disbursed to such willful defaulters. Long-term target of rupees 100 looks possible after a few banks were merged with PNB as a part of government reforms tailor-made to revive PSU banks and its performance with cleaner balance sheets. After such a poor performance, there is only one way for the government to grow, that is recapitalization. It looks to me, based on my insight and our research team analysis, that some budget proposals favoring PSU banks may be announced by Finance Minister Nirmala Sitharaman, and there are very high chances that the government will take steps and some strong measures to revive the animal spirit within the bank and galvanize a turnaround. So there are chances that some recapitalization may be done and this budget 2021 could be it. Once recapitalization done, government may introduce regulations to ensure better management of banks' capital. Then we can hope for a turnaround in PSU banks which are effectively on ventilator and life support without government intervention and support of capital, especially post COVID-19 lockdown. So majority of renowned equity research analysts have written of PSU banks, and the effect is seen on Indian stock indices with Bank Nifty trading at huge deviation. Normally it was told that banks and financial stocks would only help Indian market grow. But now that credit goes to IT sector majorly. Even if Sensex hit 50,000 points, Bank Nifty barely managed to hit 52-week high. It could not even cross 33,000 points. Had it not been for poor performance of PSU banking stocks, Bank Nifty would have crossed 35,000 points by now. However, to tackle these mismanagement adversaries, there are high chances that the government gives capital support to banks and loans will be sanctioned in a properly scrutinized manner to ensure that NPAs don't take off again from this new capital of any provided by the government. Now, same is the story of a lot of PSU banks such as Bank of India, Allahabad Bank, Punjab National Bank, Canara Bank, BOB, Dena Bank, Vijaya Bank, Union Bank, and the list goes on. Some banks have been merged. License of some cooperative banks have been cancelled. There has been loan and credit sanction sagas at private banks too, such as Yes Bank, whose stock price fell from rupees 400 to 5 rupees a few months ago with its MD Rana Kapoor languishing in jail. Same is the story of RBL Bank, whose stock prices plummeted from around 700 to 100 odd levels after being touted as the new HDFC by some analysts, but irregularities and mismanagement has troubled the bank to a heavy extent, and the performance has been severely impacted. So the NPAs are rising. Also, the RBI governor has been sounding alarm over the issue of bad loan and rise in NPAs beyond an acceptable level, indicating the pathetic strength of banks' assets. So to better focus on recovery of bank loans, an idea of bad bank is also being also being mooted. It may help a separate entity focus only on recovery of bad loans and NPAs by specific focus on identification and monetization of assets hidden or misappropriated by the promoters of the willfully defaulting corporates and also other defaulters which are significant. Till a trust isn't it established, this performance isn't it going to change at all PSU's bank, which are valued attractively at 25 to 50% range from their lifetime highs. Therefore, these stocks have nothing more to lose, and there has to be only one side, that is upswing. So many risk traders and investors are putting money in these stocks. Especially Central Bank of India has seen rising FII despite bad fundamentals, as these are deep valued stocks which effectively the net worth is as good as negative and there is nothing left for the shareholders. So it's a buy at current market price for short to long term as enumerated above. It's one of the 12 public sector banks in India to get recapitalized in 2009. Despite its name, it is not the Central Bank of India. It is a public bank. In a merging initiative of NDA government, Central Bank of India is kept as a separate entity owing to its pan-India presence. 6 independent banks, Indian Overseas Bank, UCO Bank, Bank of Maharashtra, Punjab and Sindh Bank, Bank of India, Central Bank of India, the Oriental Bank of Commerce and United Bank of India will operate as the branches of Punjab National Bank from 1st of April 2020. I believe that there is a rule of expect the unexpected. When everyone says that PSUs aren't going to perform, then at such adverse times, only prices can go in the opposite direction. The prices may go up only as it seems from the current trade setup. So buy PNB, BOB, Central Bank, Canara Bank and SBI for lucrative returns. If you have guts to take risk, because risk hai to ishq hai, as the famous dialogue goes in the season made on Harshal Mehta scam in 1992. Return expected is 50% to 500% in the next decade, as I think the next decade belongs to this sector, as government needs strong banks to fund its infrastructure dreams and needs a strong PSU bank sector to revive disinvestment in the bank with improved performance. So guys, I hope you have liked all the previous videos of mine, and please subscribe to the channel, and I hope you have shared all the videos, and please watch all the videos till end to make sure that you get good knowledge and take a message to grow from here on in the life. Thank you.